Okay, this is gold, that's spot gold daily after the analysis of the Australian dollar that I presented you with the potential of heading higher. I'm not hesitating in presenting the potential here for gold to continue higher. Gold has managed to run above my brown line here. The potential is definitely for it to continue high. You can see that I'm still using a whole bunch of ABC, X, ABC, and I assume that we are going for an X and perhaps another ABC. This is still in line, if you like, with what we are seeing in the euro that we take, in the rally in the euro that we take as corrective. But things could change. Of course, things could change. The very bullish interpretation for gold is as follows. If you remember, we have presented the alternative that could be AO1, and that could definitely work as an A. That's an A, B, C, D, E, B. I'll show you the details in a sec how I get this. And we got 5 legs down here, a big stretch C. So we have an A, we have a B, we have a C. That could be your A or 1, B or 2. Basically, what this is suggesting is that we could go down. Now, this is still mid-range, and it is not high confidence situation where I can walk in and say this is a guaranteed shot above 1380 or so. No, it's just not prudent to do that. But the potential is definitely there. The elements are pointing in this direction. I told you that if you are interested in precious metals, you should not lose sight of what the Australian dollar is doing. Now let's go and see some details here. You see I'm working with A, B, C, X, 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5. So that's a C. And then coming down, I have an A, B, C right here, which I take as an A. I have an A, B, C, which I take as a B. And you see where I'm going. I'm going in the direction of a triangle that in the case of gold will deliver probably an X. Now, it is perfectly possible that somewhere down the road I might have to come back and revise that and take off the X and put a different labelings. The point is that at this point in time, an X here would definitely support further upside, would definitely support around about 1220. Very short term, you do not want to see it breaking under this line, which is just above 1195. This is going to inject quite a lot of basically a situation that would be quite negative for gold, breaking 1195. Continuing with this break towards 1170, I would become quite bearish if I mean quite worried if I was long. If you're still around, but staying in this zone in the way that I'm showing you here, that is highly bullish, predicting further high prices in gold in the coming week. Now here is silver, and that is the daily, and we have here a wave count again that is similar to the one I've just presented in the case of gold. That we come down here with an ABC that is taken as 1 unit. You have an A, B, C, D, E right here. You see that? A, B, C, D, E, which is an X. You have an A, B, C. And that's it. That's the end of the correction. The climb is steady, is not terribly inspiring, but it's there. It's there. The MACD is lending quite a bit of support for continuing up. And what is more important is that the climb so far has generated a pattern that can definitely be taken as a 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, basically 5 leg up. 5 legs up. If we have the first leg of the new bull run, what could happen is this. I just want to show you here on the 30 minutes. And silver could have slightly different wave count than gold, although over time they sort of sort out the differences, and they give you on the general scheme of things, they give you a very similar wave count. But very short term, like when you deal with the 60 minutes or something like that, they can have different wave counts. Right here, I have this as an A, B, C. That could be A. That's A, B, C. Could pop slightly higher. We don't want to see it running above 17.3 to keep this pattern intact. And what is important in the case of silver is to see it breaking short term, breaking 16.7. So you end up having an ABC. And then we can actually come and say, you know what, we have on the daily here, we have first leg up. Look, we have first leg up, we have second leg, and if it comes back and it runs above this level, then there is very strong argument to suggest that silver is definitely heading perhaps to 19 and much higher. You would also have an inverse head and shoulders here. Do you see that? So you already know that if silver is managing to fight the resistance that you have here, that will definitely be bullish. If it sits above the resistance that you see here, then that is opening the gate for silver to run to 19, and we will see how the momentum is working. The pattern will definitely support. In that case, the pattern will support potentially a run towards 21 and higher. Again, all subject, as far as I'm concerned, subject to what is also happening in the currencies, the related currencies, notably the Australian dollar, US dollar. And here's an interesting chart for you to examine. This is a GDX. I'm sure that many of you who trade deal with the precious metals through the minor stocks, etc. They're very familiar with this one. That's the ETF. That's the weekly, and we did see destructive C right from the top of 2011 with a 1, 2, 3, 4, 5 that most likely found an end. Now this chart strongly argues for a return of the bull in the precious metals. Definitely in the mining stocks here, as you can see. We had clear shot first leg, okay, of potentially new bull market, and we can discuss a correction of an A, B, 1, 2, 3, 4, 5 behind us. If that is the case and it dipped under the 0.618, evidently the GDX is going to fly. Here we go. That's an A, that's a B, sorry, that's an A, that's a B, that's 1, 2, 3, 4, 5, that's you see. And it can be subdivided slightly differently. You know that in silver we have a different wave count, but here you go. That could indeed be the first leg of the new bull, and I would suggest if it does manage to climb above 26, and we could be now in the preparation towards a run to 26. If it does manage to run above 26, and all the other markets that I mentioned and the charts of the commodities themselves are looking, the precious metals are looking buoyant, then expect 32 and higher prices. So basically the bull will reassert itself, yes, will reassert itself, and we will continue in a third wave.